What type of number do you think would disappoint the market? We know that the oil market trades very closely on what does and doesn't happen when it comes to these OPEC meetings. A lot of discussions in the last few weeks about $10 per barrel oil. What number do you think would disappoint the market enough to push oil prices again significantly lower and to be knocking on the door of $10 a barrel?
I mean, certainly President Trump has raised expectations when he went out there with a 10 to 50 million barrel a day figure. So anything that comes in below that, I think will be a disappointment. But then I think you're going to have a lot of investors really looking at the details of any production cut. They'll be basically saying, what is the duration of the agreement? What are the enforcement mechanisms? What's the timeline for implementation? So I think you could have a vague agreement that doesn't necessarily satisfy the market. And of course, in a scenario where there is no cut agreed, then you're basically going to, I think, have a situation where prices will crash again. And then the next off ramp for basically getting the price war ended will be the June OPEC meeting. So I think a lot is really on the line.
More on that, Helima, because I mean, when we think about the potential for this not to actually be a deal or not to actually find an agreement. I mean, you and I both know, having stood outside that building in Vienna many, many times, there is a real possibility today that this could actually be a crash landing for Saudi Arabia.
Absolutely. I mean, anybody who was at the meeting on March 6th to see what happened when they failed to get an agreement and the Russian oil minister, Alexander Novak, walked out of the secretariat and essentially said it's going to be every producer for themselves. That was not something a lot of analysts were anticipating. And so I think we could easily get to a situation where if the Russians were to say, look, Saudi Arabia, you have to use a benchmark of your January production levels, or to the United States, it's not good enough simply to count what CapEx is going to do to your production, your cuts there. You need to make a mandated cut. If those are the Russian terms, this could really fall apart. And again, prices could go to the teens, and then we will be looking at a situation where U.S. producers will have to cut. I mean, ultimately, producers are going to have to cut production. It's just a question of, is it going to be a coordinated cut, or are the higher cost producers going to have to shut in first?